What you look for is just like what we're doing here. What will happen is the longs will come in, right? The longs will come in off these levels, but they won't get to their TPs. They'll come in, they will push the price up, but they'll never make their level. And what do we know then? You know, and let's draw it up real quick, right? So if somebody's trading here and this is their level, I mean, you saw it to the left, why they're longing here, right? So if they're longing here, what they're looking for is to get back up into this area. They expect that we're, you know, overextended, you know, all the things. I'm not going to go over all of it. You know what they're looking for. So what they're expecting now is that we're going to have a move, something like this. You know what I mean? They're expecting that we're going to go up, maybe even a straight up move. It depends on, you know, who you're dealing with, but they expect that we have to retest this level, even if we're going down. They expect that in order to go down, you know, let's pull that back up. They expect in order to go down that we have to retest this level, which is true within a sense, right? But what are we going to do before we do that? Right? Even if we're going down, they're looking at something like this, right? But what do we know is going to happen first? If we get longs involved, they're going to come, they're going to sweep these lows first. They're going to come and grab these orders that are down below us. So on a trending day, right, you think pullback, I guess, right? But what are we looking for? We're looking for it to come down, the longs to enter, so we get that bounce, and then we can take a move back down into their stop losses. And this hesitation right here, normally this is going to be, you know, if you've, I don't know how much you know about like SMC and stuff like that, but what they look for, right, is this break of structure. So the break of structure, and then you come back down into their blocks for the continued move up. Well, it doesn't look any different than pattern traders. It's a double bottom, you know, the break of the nose of the W, the move back up. This is how the market moves, essentially, right? It moves like this. Why does it move like this? Because this is where traders trade. Comes down to a key level, they long, comes up, it breaks down. What does it do? A lot of times you see this. And when you see a move like this and it does come up like that, what is that? That's them getting stopped here. What does it look like on your momentum waves? You already know the momentum waves go up, and that's where your bullish divergence comes in at, and then the price goes up, right? So this wicks them out that entered here, you know, the traders that went long too early. And then the momentum wave will show you bullish divergence and the price will go up, right? So essentially the market does move this way. And that's the funny thing about how, you know, everybody gets in their feelings that comes into this stream. I'm never saying that these things won't happen. I'm not saying that double bottoms don't play. I'm not saying that, you know, once you get a bullish divergence that that's not going to play. I'm saying that it doesn't always play. It plays until it doesn't. And that's what people don't get. But either way, so that's what you're looking for, right? That's what traders are looking for. So when you see these things happen like that, and you see the bullish divergence come in, and you know that traders are long, and you see this double bottom, or you see the sweep of the lows below, or whatever the case may be, all I'm saying is pay attention to the signs of the rejection going down. Because what I say about bias, right? And everybody says, well, you know, you have to have bias. Well, that's exactly what you're looking at here. When you get to this key level, all your traders now have bias. They all believe that the price is going up, right? So if you're talking about a double bottom trader, they look at it like this, and now price is going up. So that's their W on the lower time frame. They're going up. If you talk about, you know, SMC traders, what are they looking for? Well, this was a break of character, change of structure for the up move, right? So same thing, pattern traders, everything else. So their bias is long, right? And will price go up? Well, yeah, price can go up, right? But what are we looking for? We're saying, okay, well, there's one of two things that are going to happen. Either they're going to hit their take profits, right? They're going to hit their take profits, and let's just say take profits are here. We're just going to go fun with it. We'll just go green. So take profits are here. Stop losses are here. And this is the only way we're looking at it. It's not got anything to do with bias. It's got to do with the fact that if this price doesn't go up here and hit their take profits and they start getting stuck and we see a setup and an entry to come down and take their stop losses, we're going to trade into that. Right? That's it. Do we say they're going to lose this trade? No. But the fact is, if they do lose this trade, I'm going to be in it. That's all. That's all I'm looking for. Right? So if they win, great. If they lose, I'm going to be trading it. That's really all there is to it. So that's what we're looking at. So on the trending days, that's exactly what we're looking at. We want the traders to get long. We want their take profits to not get hit because that's where their sell orders are. So you have your choice between taking your sell orders there, taking your sell orders down here. The biggest difference between taking your sell orders here to where they're taking profit and they're selling to take profit is traders are going to be trading short there as well. So now you're trading with the other traders if you're trading into their take profits rather than their stop losses, to where below you're not, right?